Welcome back, everyone. This is John Q. You go in, Q3, American Stock Stories with Toomtimi. Today, we've got quite a stack of material to get through on a company that really embodies, I think, the extreme contradictions of the modern internet. We're talking about Reddit, ticker symbol RDDT.
Yeah, extreme contradiction. That's actually a perfect way to put it. We're doing a deep dive today into, well, one of the most volatile, definitely one of the most polarizing, and, potentially one of the most lucrative stocks in the whole social media space right now.
So our goal today, our mission is pretty straightforward. We want to give you, our listeners, a really comprehensive, balanced assessment of Reddit. We're going to focus heavily on what just happened with their latest financials, and also this fierce tug of war that's going on between their incredible growth potential and some very real risks about platform integrity that, well, they could undermine everything.
And we really have to keep the date locked in our minds here. It is November 2nd, 2025. That context is just crucial because, as the sources we looked at really highlight, Reddit has seen staggering volatility since its IPO.
Staggering is the word, almost a tenfold increase at its peak.
Yeah, hitting an all-time high of $282. So we're diving into why. Why does this company provoke such strong opinions, such wild price swings? And specifically, what do these very recent Q3 results tell us about where it might be headed?
Okay, let's start at the beginning then. The core business. What actually is Reddit? Because when we talk about it, I think the instinct is just to lump it in with, Meta, Snap, the usual social media suspects. But the materials we review, they consistently suggest that label might be, well, fundamentally misleading.
Oh, it absolutely is. If you're using Reddit like you use Instagram, you're kind of missing the point, really. It doesn't mainly operate as, a feed of personal updates or those quick transient videos. It fits much more squarely into the category of discussion and community forums.
Ah, okay. So conceptually, it sits alongside platforms like Quora, maybe Discord.
Exactly. Conceptually, it's right there with them. But, and this is key, it has a much, much greater historical depth to its content.
Right, that discussion and community that seems absolutely central to understanding the whole investment idea here. Reddit isn't built around individual profiles so much as it's built around these specialized virtual communities, the subreddits.
Precisely. And these communities are all about creating, sharing, and aggregating user-generated content. Ideas, interests, expressions, often very niche ones.
And that very structure, is that its first line of defense against competitors, would you say?
I think so. The platform's real utility comes from its ability to hold on to highly specific, often quite durable information. If you're, say, another company looking to acquire content that gives you genuine human insight into specialized topics, well, Reddit is probably where you look first.
Okay, and this is where it gets really fascinating for me. The part that goes beyond just standard social media metrics. It really speaks to its value as this kind of engine of knowledge. Our sources point out that Reddit functions almost like a massive living information tool.
Yeah, like a distributed, crowdsourced encyclopedia of human experience almost.
Exactly.
And I found that observation really compelling too. A lot of tech-savvy users, they now actively bypass traditional Google search. Instead of just searching for an answer, they'll actually search Google for an answer on Reddit. Or they'll add Reddit answer right into their search query.
Why do they do that? What's the thinking there?
Because they believe, or perhaps know from experience, that the answer they find on Reddit will likely be filtered through, genuine human experience and debate. It's not just some SEO-optimized landing page trying to sell them something. It feels more authentic.
That user behavior really says a lot about the platform's perceived authenticity, and maybe its longevity, too. That's something few other modern platforms can really replicate, can they?
Not easily. Think about it. If you're looking for a really obscure solution, maybe debugging some specific hardware issue on an old PC that nobody's talked about widely since, say, 2018.
Right, something really niche.
Or you want genuine, long-term opinions on maybe financial trends that span a whole decade. You often find the most specific, the most authentic, and frankly, the most useful answers buried deep in some years-old Reddit thread.
Whereas traditional social media, it's just so ephemeral, isn't it? Facebook posts fade, tweets disappear into the void.
Exactly. But that niche content on Reddit, carefully cataloged away in a subreddit, it stays accessible. It stays indexed. It actually adds value over time, which is quite unique.
And crucially, this utility, this function, it doesn't seem to be fading or just aging out with its original user base. You might have this image of Reddit being dominated by, the folks who were building the internet decades ago, but the sources we read point to a pretty strong generational shift that's keeping that content production line really fresh.
And that is a massive, positive signal for its long-term viability, definitely. We hear so much about generational divides in media consumption, right? The stark difference between how older users might rely on Facebook versus how Gen Alpha consumes content.
Totally different worlds.
But for today's teenagers, for Gen Alpha,
Mm.
Reddit is still consistently mentioned as one of the, quote, three main players in town, right alongside Discord and TikTok.
That's fascinating. Retaining the youth like that, it's powerful data if you're looking at the long-term investment case. The sources cite the continued activity, the growth even, of specific generational subreddits, like teenagers, as actual proof that the platform is successfully passing that torch from one generation to the next.
Which means, the next generation of content producers, the next generation of consumers, they're already kind of locked in. It ensures this continuous supply of that unique human-generated data that the market and increasingly the AI world finds so incredibly valuable.
Yeah, if it wasn't attracting Gen Alpha, the whole investment story would look very, very different.
Fundamentally different, yeah.
Okay, so we've established this foundation, right? Unique, seemingly authentic content, generational relevance. But the market, ultimately, only really cares if that foundation translates into serious money, serious revenue. So let's pivot hard now to those Q3 numbers, because they are the immediate driver of the stock's current path. RDDT just put out its Q3 2025 results on October 30th, and, well, the market reaction was pretty explosive, and for good reason, it seems.
Yeah, the performance wasn't just good. It really signaled that the platform is finally and rapidly figuring out monetization. Let's just run through the key growth metrics quickly because they fundamentally change the narrative around this stock. First, look at the top line. Revenue surged. A massive 68% year over year.
68% year-over-year growth in what most people consider a pretty mature social media landscape. That is stunning.
It really is.
They hit $585 million in revenue. And importantly, that beat analyst forecast by over $35 million. That's not just a small beat, that's a significant beat. It suggests the market was seriously underestimating how fast they could monetize.
Exactly. And crucially, this wasn't just raw, expensive growth that costs a fortune to acquire. They showed real progress towards consistent profitability. GAAP earnings per share, the EPS, hit $0.80. Now, for listeners maybe less familiar, GAAP just stands for Generally Accepted Accounting Principles. It's a standardized way to measure profit per share.
Right. And beating the expectation on that metric by $0.28, that sends an extremely powerful signal to the market right now, doesn't it?
It really does. It suggests the revenue growth isn't just smoke and mirrors. It's high quality. And it's actually translating efficiently down to the bottom line. Their net income was reported $163 million. That's a very healthy 28% of their total revenue for the quarter.
28% net income margin alongside that kind of growth. But maybe the figure that surprised me most for a content and ad-driven business anyway was the efficiency, that gross margin figure.
Oh, absolutely. Their gross margin improved significantly. It reached a, frankly, remarkably high 91%.
91% gross margin. That's almost... Well, it's almost unheard of for a platform that relies on user-generated content and all the complex infrastructure that entails.
It tells a story of an extraordinarily efficient operation, doesn't it?
It really does. If they can keep that level of margin while still scaling that, 68% revenue growth, the market starts seeing a very long runway for profitability opening up.
And importantly, none of this high efficiency seems to have come at the cost of user engagement. The engine driving all this, user activity, it stayed robust. Daily active uniques, or DAUQ, grew 19% to 116 million.
Okay, so 19% user growth, that's lower than the revenue surge, obviously, but it still shows the fundamental utility, the core usage of the platform is expanding steadily. It's not shrinking while they monetize more heavily.
Right. Solid user growth underpinning the financial explosion.
And these results, they immediately shifted the forward outlook on Wall Street, didn't they? The company's guidance for the upcoming Q4, they're projecting revenue between $655 million and $665 million, which, again, surpassed what analysts were expecting.
Yeah, they're basically signaling confidence that Q3 wasn't just some lucky break, not a one-off event. They expect this momentum to continue.
And the market reaction was pretty predictable following that guidance. We saw Baird, a major investment firm, they kept a neutral rating, still a bit cautious, perhaps?
Right, a cautious stance overall.
Yeah.
But they just couldn't ignore the numbers. So they raised their price target significantly.
And that price target jump, I think, is really instructive. It went from $177 all the way up to $240.
It's a huge leap.
It is. That massive hike, It reflects the undeniable strength of the underlying performance, even if that particular analyst still has some caution, maybe about the long-term competitive picture. It basically says, okay, wow, this company is worth at least $63 more per share than we thought just a few months ago.
And this is where we kind of loop back to the volatility we mentioned right at the start. Given that IPO trajectory, that all-time high of $282, and now this really strong earnings beat, any recent dips in the stock price, well, they've been seen by certain types of investors not as panic signals, but actually as opportunities.
Opportunities to reinforce their positions, you mean?
Exactly. I saw one investor comment quoted in the sources that described the price drop before the Q3 report as, and I'm quoting here, bullish as feck.
Strong words.
Very strong. The argument was basically that if you looked at the underlying fundamentals, the growth trajectory, the short-term fear was just completely overblown. So for them, any price under $200 was seen as an amazing opportunity to scoop up shares.
That kind of aggressive buying, that sentiment, it must have real technical implications for the stock chart, too.
Oh, definitely. Technically speaking, investors are watching that $200 price level very, very keenly right now. The consensus seems to be that holding $200 as a major support level is absolutely key.
Why $200 specifically? What makes that level so important in this context?
Well, it acts as both a psychological and a technical anchor point. The longer the stock can sort of build a base, trade sideways for multiple weeks without breaking decisively below that $200 level, the stronger that foundation becomes.
A stronger base for what? The next move up.
Exactly. For its next potential major breakout, maybe towards that $282 all-time high again eventually. And this extraordinary Q3 financial performance is definitely lending immense strength to that base formation right now. It suggests the recent floor might be higher than many short sellers were betting on.
Okay. So, undeniable, really outstanding financial performance just reported post Q3 2025. But as we always say, stock valuation is really a story about the future, isn't it? Not just the present moment. And Reddit's future seems subject to this really intense tug of war between some major growth levers and some pretty serious platform risks. Let's start by focusing on the optimistic view first. The reasons the bulls, the optimists, are so confident they can keep this trajectory going.
Right, the positive dynamics. The first and probably the most powerful argument for future growth, it really revolves around advertising monetization, specifically Reddit's average revenue per user, or ARPU. The current market valuation, it's basically pricing in the expectation of sustained ad revenue growth. Why? Because there's still a massive gap to close compared to rivals.
Okay, let's break down that ARPU gap a bit for listeners. Even with that explosive 68% revenue surge we just talked about, Reddit still has a relatively low ARPU compared to other big social platforms. Why is that gap so wide, and what's the potential there?
Well, the gap is wide mainly because Reddit, sort of by design, resisted really intense profile-based ad targeting for a very long time. They arguably prioritized community integrity first. The source material gives us a really stunning comparison here. Instagram alone made about $60 billion in ad revenue last year.
$60 billion. Just Instagram. Wow. That number really puts Reddit's current revenue into perspective, doesn't it? That's the key insight.
Precisely. If you just look at that staggering figure from one competitor, Reddit has this enormous, almost unprecedented amount of headroom to grow its monetization.
Huh.
Even if it only manages to capture a fraction of what its more aggressive competitors achieve per user, that could translate into billions and billions of dollars of potential future revenue growth.
Just by doing what? Improving basic ad targeting, video ads.
Yeah, things like improving basic targeting, better video integration, maybe implementing more premium user features people will pay for. Simple levers, relatively speaking.
So the rapid ad revenue growth we just saw in Q3, it might not be just a fluke of one good quarter. It could be the beginning of a much longer, sustained trend as the platform finally, maybe, figures out how to monetize its huge user base more effectively, bringing its ARPU closer to those industry giants.
That's the argument, yes. And it's arguably the most predictable growth lever they have right now.
Okay, what's the second major positive lever?
This one gets a lot of press. It's the AI data goldmine narrative. This is genuinely unique, I think. It's a story about the inherent, probably non-replicable value of Reddit's vast corpus of content.
Yeah, this narrative is really compelling, especially for long-term investors, isn't it? We already established that Reddit's content, all those specific, authentic, sometimes messy, niche discussions, is uniquely valuable for training large language models, LLMs. But why specifically? What type of human content is most valuable to companies like, say, Google?
It's the messiness. It's the conversational nature, the real-world complexity. Think about technical debugging threads. where a whole community walks through maybe 10 different failed solutions before finding the right one. Or those long-term personal finance tracking posts that show genuine user sentiment evolving over years.
Right, not just clean, structured data.
Exactly.
Yeah.
These LLMs, they need that kind of human-verified, debated, categorized, sometimes contradictory information to get smarter, to advance beyond just pattern recognition. There was one user analyst comment we saw that summed up the power dynamic perfectly, I thought. They said, ChatGPT needs Reddit more than Reddit needs whatever AI models.
That really shifts the power dynamic, doesn't it? It paints Reddit not just as another vendor selling data, but as an almost indispensable utility for the entire AI sector.
That's the bullish take, yes.
Now, for context, Reddit did sell some of its data to Google recently. The figure mentioned was $60 million. Let's put that number into perspective against their overall business.
Yeah. It's important to keep the scale in mind. Even if Reddit somehow managed to charge 10 times that amount, let's say $600 million a year for data licensing deals.
Which would be huge.
Huge, yes. But even that $600 million revenue stream is still less than half of the advertising revenue they generated just last year alone.
Okay. So while the AI licensing deals are definitely lucrative, probably very high margin, a nice new revenue stream, it's still a relatively minor portion compared to the core advertising business right now.
Right.
So what does that tell us about the real value proposition here?
Well, I think it tells us two main things. First, the primary financial engine driving Reddit, for the foreseeable future anyway, remains advertising. That ARPU gap is still the biggest financial story. Second, though, the value of the AI deals isn't just the direct revenue they bring in, it's also that they reinforce the platform's foundational importance. If the cutting edge of AI needs Reddit's authentic, human-generated content to improve, well, that underscores the non-replicable nature of the platform itself. It confirms the inherent value of that user data in a way that kind of legitimizes the whole business model.
That makes sense. Okay, third positive dynamic. This one's an external factor, a competitive tailwind. And this is where market dynamics get a bit political and maybe chaotic. Many users and observers, according to our sources, argue that Elon Musk's acquisition and the subsequent transformation of X, formerly Twitter, was, quote, probably the best thing to ever happen to Reddit.
Yeah, the irony there is pretty thick, isn't it? But chaos at a major competitor often does create opportunity elsewhere. The changes at X seem to have effectively created a significant split, a bifurcation in the social media ecosystem, especially for text-based discussion.
How so? Sources suggest that as X moves towards what some users describe pretty bluntly as a right-wing cesspool or maybe a truth social competitor.
Strong descriptions.
Yeah. Very. It apparently pushes away users who are looking for different kinds of discourse, especially maybe younger, more politically engaged users who tend to lean left. And our sources suggest that Reddit, in contrast, is generally perceived rightly or wrongly as being heavily left-leaned.
Now, this political split, it isn't just ideological noise for investors. It actually has potential structural benefits for Reddit financially. It potentially pushes a large and often demographically desirable segment of the online population, people seeking maybe uncensored but still moderated discussion, directly toward Reddit as an alternative.
So it solidifies their base, increases traffic.
Potentially, yes. It could solidify its base and increase overall traffic and relevance, especially among, say, metropolitan youth demographics, who are highly sought after by advertisers. It's almost like an unintentional competitive advantage being handed to them by the competition's own strategic pivot.
Okay, that is a pretty formidable bullish case then. Massive ARPU headroom still to capture, non-replicable AI data value that confirms its importance, and a major competitor potentially driving users its way. Now, though, we absolutely have to flip the coin. We have to look seriously at the risks, which seem quite existential in nature. They concern the quality of the core product itself. The biggest counter-argument to that whole bullish growth story seems to be the potential decline in platform quality and content integrity.
And this is a risk that directly, fundamentally threatens the entire value proposition we just spent the last 10 minutes outlining. If Reddit's primary asset, its crown jewel, is the authenticity and the durability of its user-generated content, then these internal problems could absolutely kill the golden goose.
So what are we seeing specifically? What are the warnings sources warn about? And again, I'm quoting, so much astroturfing.
Yeah, that's a huge red flag. Astroturfing, just for listeners who might not be familiar, it's basically disguised commercial or political activity, right? Fake grassroots support designed purely to manipulate sentiment or push a product or idea.
Combine that with, lingering suspicions of market manipulation, potentially driving some of the past price drops, and you start to paint a picture of an environment where trust can erode very, very quickly.
And the bot problem seems particularly insidious because it's potentially degrading the platform's unique selling proposition in a very direct way. Users are complaining, quite loudly in some places, that the platform is getting overrun with bots and AI answers. Think about the circular logic here for a second.
All right, what's the circular logic you mean? AI models get trained on Reddit because of its authentic human content.
Right.
But then those very same models, or maybe just simpler bots spitting out AI-generated answers, they flood back onto the platform.
Exactly. They flood the platform with low-quality, derivative, maybe even just plain wrong answers that look like human contributions.
And that creates a negative feedback loop.
A potentially severe feedback loop, yes. The platform risks eating its own seed corn, essentially. If users can no longer easily distinguish between genuine, hard-won human advice and some quickly generated GPT summary, the overall quality of the data pool declines.
And if the AI sector then starts training its next generation of models on this increasingly polluted, low-quality data derived from Reddit itself.
It completely undercuts the long-term value that those AI developers placed on Reddit's corpus in the first place. It diminishes that whole AI goldmine narrative over time. If the data stops being reliably authentic, its value plummets. It could become worthless.
That's a really serious threat. And it's not just about bots, is it? Beyond the technical integrity, there are also major concerns raised about the nature of the human discussion happening there. Despite its image, maybe its founding ideal as a place for diverse viewpoints, some users argue quite strongly that political and social discussions in particular are often super biased and truncated.
Yeah, this seems to speak to the inherent structure of subreddit moderation. It often manifests, according to these users, as immediate downvoting or even outright banning of opinions or disagreements that challenge that specific subreddit's preferred norms or consensus view.
So if that criticism holds true, it implies that while Reddit might still be fantastic for finding very specific technical solutions, like fixing that old PC,
Right, the factual, objective stuff.
it might be becoming less and less effective, maybe even hostile towards nuanced or emotionally charged debates on more sensitive topics.
And that potential reduction in nuance, if it becomes widespread, ironically reduces its utility as a broad, vibrant discussion forum overall. It could potentially drive away users who are actually seeking genuine debate and diverse perspectives rather than just an echo chamber or confirmation bias for their existing views. It's a huge internal challenge that moderation teams grapple with constantly, I imagine.
Definitely. Okay, finally, the elephant in the room for any growth stock.
Yeah.
Valuation. All this exciting talk of growth, potential ARPU increases, AI licensing deals, it doesn't erase the current reality, does it? The stock is still trading at what sources describe as a high PE ratio, even after accounting for that massive Q3 earnings beat.
That really is the ultimate tension, isn't it? The current high price is fundamentally a forward-looking bet. It's a bet that the projected massive growth we've discussed will actually materialize, and without any significant hiccups from these platform integrity issues.
But what does that mean in real numbers? How much growth do they actually need to deliver to justify this high valuation? Is there any sense of that?
Well, the only way this high valuation makes sense mathematically is if that extraordinary growth rate really holds true for several years. We saw one conservative analyst forecast suggesting that the price-to-earnings, or PE ratio, which, again, is just a measure of the current share price relative to the company's per-share earnings, could potentially drop significantly. They suggested it could fall to maybe the 2022 range by the end of 2026, and possibly even lower, maybe down to 13, 15 by the end of 2027.
Okay, let's quickly contextualize those PE numbers for listeners. A PE of 13 to 15, that's typically what you'd see for a highly mature, consistently profitable, but probably pretty slow growth company, right?
Generally speaking, yes. And a PE of 2022 suggests solid, reliable growth, but not necessarily explosive growth anymore.
So to get from their current high PE ratio down to 2022 in about a year, and then potentially down to 13, 15 within 3 years, that implies they must maintain an absolutely extraordinary rate of earnings growth for that entire period.
It really does. It means buying RDDT stock right now, even acknowledging the strong Q3 report, is implicitly betting that the company can sustain that phenomenal growth rate for at least the next 3 to 4 years. That's what's needed to make those 4 PE targets achievable. If that growth slows down significantly, perhaps because advertisers get spooked by platform integrity issues, or the ARPU growth stalls, or AI deals don't materialize as hoped, then the current high price becomes fundamentally unsustainable.
And the volatility we've already seen.
Will likely return with a vengeance, absolutely.
Okay, let's try and synthesize this a really complex picture then. Reddit, right now, November 2nd, 2025, is a company demonstrating absolutely phenomenal momentum. The Q3 results show that massive 68% revenue growth, a truly spectacular 91% gross margin, and confirmed consistent generational lock-in among younger users, which is key for the future.
Yeah, and the core investment thesis, the bullish story, it's built squarely on future potential. It's about closing that huge gap in average revenue per user compared to competitors like Instagram. And it's about monetizing its unique, valuable content through things like AI data licensing deals, which also happen to confirm its strategic importance in the broader tech ecosystem.
But that tension we discussed, it's palpable and it feels critical. This entire really explosive growth story fundamentally rests on the perceived authenticity and the actual quality of its user-generated content.
That's the bedrock.
And that authenticity, that bedrock, it seems to be under direct threat from these internal platform integrity issues. We talked about the astroturfing, the potential for political bias driving users away from nuanced debate, and maybe most worryingly, that rapid influx of automated bots and AI-generated answers polluting the well.
Which brings us, I think, to the final, maybe provocative thought for you, our listeners, to mull over after this. The core financial value of Reddit, whether it's ultimately captured through advertising targeting those users or through licensing that content to AI companies, it all derives from its unique, human, often messy, real-world answers and discussions. So the big question is, how long can Reddit maintain its perceived authenticity? That's the engine driving its traffic, its high margins, its value to AI. How long can that perception last if the platform itself increasingly struggles to differentiate between genuine human users and the very bots and AI models it helped to train?
That feedback loop.
That feedback loop could honestly be the company's greatest long-term challenge, regardless of how strong the next quarter's revenue beat might be.
A truly critical question. For investors, for users, for everyone watching this company navigate its really volatile path forward. Thank you for sharing all those insights from the sources with us today. It's been a fascinating deep dive. And to our listeners, if there is a company you want to know more about in the future, please leave a comment. Come, so for a share of Trocomzoo.